So that was funny. The answer to 13 is D. Current liability is an obligation to be paid off using existing current assets or by creating a new current liability. So 2 is C. Let's see here. The current liability. Oh, I'm stupid. I read that question totally wrong. 3E. Gain contingencies. Not accrued while still a contingency. The answer for 4 is E. None of the above. Gosh dang it. I hate none of the above questions. I hate that. I didn't get that right. I was really confused by this question too. Man. So the interest expense and then the depreciation expense equals that divided by 6. You didn't take the second one divided by 6, you took the first one divided by 6. And I took the second one divided by 6. So it's actually that. I mean, yeah. Okay. I hate none of the above questions. Number 5. C. I wonder what I got for that one. Did I even get an answer for that question? Oh. Um, their liability is this, and then they warranty. What about the 12 million? Oh wait, I'm an idiot. So 10.4 plus 18 million minus 12 million. So minus 12 million is pretty easy. What's the 18 million? 60,000 times 80. Wait, what? How is it 80? What? Wait a minute. Wait a minute. How is it 80? No, not 80. What's that other thing there? What's that number? Gosh dang it. 30? No, maybe that's 30, not 80. I can't even read it. Wait, all I have to do. Okay, 60,000 times something equals 18 million. So 18 million divided by 60. 300. Okay, where'd you get 300? Oh, duh. Why'd he write it so weird, though? What? What? That's totally a misprint. It's 300. So he sold this. They sold 60,000 units. The cost is $300 per unit. So the total warranty, their liability is this. Then they add the warranty expense, which is a liability because they haven't paid it yet, which is the 60,000 times 300 units sold. And the amount that they sold it for is not even relevant to the question somehow. Okay. And then you subtract the 12 million. So you get 16.4 million. 6 is B. And that's the last one for this. Okay. Cash rebate. 6 is B. 6 is B. Wait, there's no real explanation. 175,000. Yes. So he got the. So what is the rebate expense? It is 375,000. So what is the rebate expense for 2018? It's 375,000. Why? He didn't really show the solution. I don't even remember what I did for this. Okay, so I think the price of the selling price is irrelevant again. The same type of problem. How is the selling price irrelevant? You gotta be kidding me. He didn't really show the solution there. So they sold this many in the year. 10% of that is 375,000 packages, and they're going to gain a $1. They're going to pay $1 for each of them. So the $4 is irrelevant somehow. Okay, so I get this. They had a liability of 375, then they paid 200,000 of them. So the $4 thing is completely irrelevant again, even though I did use it in when I was doing the quiz. So never mind. In both of those questions where they had something where they had a warranty question and a rebate question, and they had a selling price for something that they sold. Both times the selling price was relevant, even though I remember it being relevant in some of the example problems. So that's great. That's just great. Well, I logic that was funny my way through the so chapter 14 quiz. Let's see how badly I did on this quiz. Number 1 is D. I got it right. Let's see. The answer for 2 is B. Yes, I was correct. Interest paid on the bond is greater than the market return currently acceptable to investors. That's just the same thing stated in a different way. But the reason, if a bond is issued at a premium, I had to like logic my way through it. That was funny. Like basically think about how the bond price has an inverse relationship with the market interest rate. So therefore, if the bond price goes up, the market interest rate goes down. So therefore, if the market interest rate goes down, the stated rate of interest exceeds the market rate. So that's how I was able to get that one correct. Number 3, D. What is this? Oh, thank goodness I got this right. I kind of had to guess on this when I took the quiz. This was kind of a weird question. Like, I didn't really think about the concept of it. I was just doing the problem, the math for the problem before. So, difference between the reacquisition price the net carrying amount of the debt, which should be recognized in the period of redemption. And I probably totally screwed up the other questions. Number 4, C. What did I get for this? Did I guess on this one? No, I don't think I did. I thought I got the right answer for this. Um, I know how to do these bond schedule thingamajigs. I just don't know what the heck was going on in number 5. Like, I don't know what I was doing wrong in number 5. Did I get this one right, though? I wish I could see my quiz and see what I answered for this. So initial starting number, then you have this first interest payment. So the payment is going to be 7.8% of this, but you're going to divide it by 2 because it's, or no. Yeah. Yes. Divide by 2 to get to this. And this interest expense is going to be this times this. Oh, wait, no. This times this. No, this, the interest expense is this times this divided by 2. And then the discount is going to be the difference between these, and then this plus this equals this, and so on. It's so simple. So, I mean, that's very easy. I don't know how I could have possibly... Now, what did I mess up on this? What did I mess up on this, dude? Okay, so the total discount is the difference between this and this. Then the annual is going to be this divided by 20. Now, did I divide it by 2 and I was not supposed to divide it by 2? That's funny. Like, it's 2... Like, because it's straight line, it doesn't matter that there's 2 years. He's just calculating annual amortization. Well, I should get the same answer regardless, because regardless of whether I was talking about monthly or semi-annual or annual payments. Annual is that unamortized bond discount equals so the total amount minus there's 3 years of annual because there's 3, 2011, 2012, and 2013. And what I was doing is I was using a schedule. I don't know what I did wrong in the schedule that I made on Excel. I wonder if I even saved it. I think I did save it. Dude, I gotta look at this. I think I saved it. I'm gonna open Chapter 14 quiz. Like, what did I do wrong in there? Like, I was calculating semi-annual payments, but I should still get the same answer anyways. So what on earth? Where on earth is it? This one. It's this. So, I mean, I got, what's the answer for 5 anyways? D. So I definitely got the wrong answer. Or wait. Yeah, I definitely put C instead of D. So what on earth did I do wrong then? Wait, what was the question asking? Carrying value, yeah. So, how on earth? I was doing 2 annual payments per year. So, this right here is the end of 2011. This is 2011. This. Oh my gosh, why was I being such an idiot? I was doing effective interest instead. You've got to be kidding me. Why am I so stupid? Why was I doing effective interest, you stupid idiot? What the heck? Where did I get these numbers? Yeah, I was doing effective interest like a stupid moron. That's why I did 5 wrong. I would have gotten it right probably if I had done the straight line method. Gosh dang it. And then what's 6? D. Did I guess on 6? Wait, what did I do for 6? I'm pretty sure I did the right thing here. I did the right thing on 6 in the quiz. Man, how could I be so stupid as to do the effective interest method on accident for number 5? How? issuing bonds. You issue bonds is you receive cash, you have premium, or you do bonds payable credit, and then the difference there is going to be premium on bonds payable. Premium is going to be a credit and discount's going to be debit. And then issuance of bonds. That's pretty easy. Now 7, let's see if I guessed the right answers. 7 I tried doing and I just somehow didn't get any of these 4 answers, so I was screwed. 7 is C. Oh my gosh, I might have guessed right. I think I guessed C for 7. And then 8 was B. I got that wrong. But I did guess 7 incorrectly. But I didn't do it right on... 7 was... C. What did I even get for 7? Like, I got 94,000. The answer was 37,200. I wasn't even close. So I need to figure out 7. My goodness, dude. Oh my gosh. I need to see where I went wrong when I was taking the quiz in class, because like somehow I got all this wrong. I need to just do the problem again here. So following the directions, say 40%. I know it's a 10-year maturity, and they retired 40% of the bonds. Now, maybe that's where I went wrong. Like, what's 40% of 94? 0.4 times this. Well, it went to 37,600. That's funny. I got that's one of the answers, but it's not the right answer. Oh my goodness. Maybe that's where I went wrong. I forgot that it's supposed to be 40% of it or something. Maybe I should try doing it myself again and try to yeah, I'll just try doing it myself again and see what happens. That was funny. I'm not going to copy the solution. I'm just going to highlight the question and just hopefully ignore the part of the work that he did. Gosh dang it, stop being slow. So, let's see here. I can just cover up my old stuff. Oh, man. So, that's fine. Right. Forward. So what the heck? 90. It was a 3% premium, or premium equals 3% of 2 million because they were issued at 103. So his handwriting's so bad that I'm just going to redo the calculation. That's funny. Equals 2000000. Yes, I know I'm using that part of the stuff that he wrote. Gosh dang it. So that's the premium. That's easy. Are they using straight line? Yes. So do they want you to calculate the monthly amortization? Yes. So I think that might be the next step. Monthly amortization is going to be, for some reason I always have the urge to watch my Crash Bandicoot World Record speedrun, but I probably should not. But I'm going to anyways because I'm stupid. You get to see what's in my YouTube recommended now. It's funny how Smosh keeps showing up in my recommended even though I literally never watch their videos anymore. I'm just going to watch Hub 1. That was funny. Oh my goodness. Wasting time. we are going to do the question, gosh dang it, equals this divided by how many months there are. Well, hold on a second. Number of months equals how many years? 10 years. 10 times 12. So monthly amortization equals this divided by this, 500. Dude, I bet this is not going to fix the flame. So we have monthly amortization. So I mean, it says unamortized. Now, what the heck do they get from telling you the balance sheet on December 31st, 2012? I don't get why they tell you that. Like, they didn't really need to. They could have just told you. Like, they really didn't need to show you the unamortized premium on for $54,000 right there. But anyways, we've calculated, I mean, there should be number of months of amortization is going to be 24 because it started, oh wait, hold on a second. So, no, it's 12 plus 2, so 14 months. And then total or unamortized or let's go with total unamortized premium, and then we'll divide it by or times it by 40% afterwards. So it's going to be equal to, that was funny. It's going to be equal to, there's 14 months, so yeah, this times this, and then 40% of unamortized premium is equal to 0.4 times this. So it should be that, right? I'm getting completely different numbers. I don't know what the heck is going on here. Yeah, I don't know what I was doing up there. Wait a minute. Anyways, maybe that's what I missed when I was doing the problem initially. So what do we need to know? Retired, 800,000. So we already know amount of retired bonds is 800,000. So, and the cash received is going to be, now this is the confusing part of this question. It says they received cash and interest accrued. They received the interest accrued. Oh, wait a minute. So they must have received 2 months of interest in addition to the cash. Ugh, great. Okay, so interest accrued is going to be 2 months of interest. Now, how do you calculate that? Ugh, that was funny. Well, first of all, we know the monthly amortization. Okay, is that, so how much interest then per month is it? Shouldn't it be like somewhat simple to get the interest per month? Like interest per month. So there's like the semi-annual payments. There's the amount of premium that is amortized. So do you subtract or add them together? That is the question to get the interest expense for straight line. So you have the payment, like you have monthly payment. Well, I calculated that as 15,000. Weirdly, but really it's a semi-annual payment. My goodness, how do I deal with this? We calculate interest for straight line amortization. Like usually we're doing, when I do this type of problem in like the spreadsheet for straight line amortization, I don't do monthly, I do semi-annual because that's how it is done in real life. It's semi-annual. In the question it says it's payments semi-annual, so why would you convert it to monthly? I guess it doesn't makes perfect sense because it's like if you do monthly payments, and you're going to have to divide it by 40% or times it by 40% too. So monthly payments is going to be 0.09 times 2,000,000, and then divided by 12, and then you're going to also multiply it. I don't know if I need to put stuff, multiply it by like order of operations, multiply by 0.4. So we got 6,000 monthly payments, if it was monthly payments. I don't know if I'm even doing it right. Like, I'll look at his way of doing the solution. So, but yeah. So, like, we have monthly payments to that. We have monthly amortization. Oh, wait a minute. No, this doesn't make any sense. Come on. Man, this is so confusing. We have total. What are we looking at right now? Okay, so how do you calculate the interest payments? Do I have to do a whole long series of calculations for this? Because the way you normally do it is you calculate the payment, you calculate the amount that is amortized in a certain period, and then you would either add or subtract those two numbers. I don't even remember which. And that would be it. So maybe this is the point where I should just look at the solution, because I don't want to do something that's super long and inefficient and teach myself something that's not right. So yeah, unfortunately, I'm going to have to look at this now. Premium equals this. Monthly amortization is 500. Got that right. Unamortized premium. What are you doing? What are you doing, man? Dude. Wait a minute. Wait, how is the 53,000 relevant? How is that relevant? That's okay. So now the unamortized premium total is 53,000. How on earth did I get 7,000? How? That doesn't make any sense. Wait. I'm so stupid. How did I mess that up? 18 to 19? I did this times this. That's the total amortized premium, not unamortized. So this is the total amortized premium. I'm so stupid. So the total amortized premium is this. Okay, I need to get rid of this. The total amortized premium is that. Like, I don't know why. I guess maybe it made the calculation slightly easier that they gave you the 54,000 already. You didn't need to calculate the total and then total amortized and then subtract it from the premium. Like, you could just go straight into, well, they had 54,000 unamortized there. There was 2 months of it. So unamortized premium March 1 equals this. Well, I mean, it was this 54,000, and then you subtract 500 twice. So, because it's 500. Yeah, that was funny. Oh my goodness. So what now? Oh my gosh, dude. So the carry value of the retired bonds is that. But you don't need the carry value of the retired bonds, do you? Why would you need that? Oh, I guess the reason is because it's a little bit more simple. Because what I was trying to do was I was trying to do the whole thing where you make a journal entry, and then while you're doing that journal entry, you calculate the gain. But it'd be a little bit more simple to do a direct calculation where you do the carry value and minus the cost to retire the bonds equals the gain or loss. So oh my gosh, oh my goodness, I'm now gonna watch stuff. Man, such a glaring time loss with the 12 seconds lost in this section here. And this is so pathetic. The carry amount value of the retired bonds equals So normally what you could do is do 2 million, subtract the unamortized amount. Wait, no, duh. Oh, no. You would do 2,060,000, subtract the unamortized amount, or 2 million plus the unamortized amount. Times 40% equals that. Cost to retire bonds equals 800,000 times 98%. What? Oh. So cost to retire the bonds. Oh my gosh, why is this so confusing? Oh my god. The interest was not even a part of the equation. They say a plus accrued interest, so why don't you use the accrued interest as part of the equation? Why? That's so confusing why they would say plus accrued interest. It just literally wasn't used at all in the question. What? Why would that phrase be there? It's just there to confuse you. It doesn't make a difference at all. According to his solution that he wrote down. What the heck? Okay, number 8. What on earth? I don't think I even had time to do number 8. Maybe I'll just try to do it. And I'm probably going to have to do 7 again at some point today to make sure I can do it on the test. And watch as I study only the quizzes, and there's going to be a bunch more stuff on the test that I was also supposed to study. Like, you would think the quiz would be reflective of what's on the test. And it's a 2-hour-long test. I mean, it's kind of nice when there's a lot of questions on a test, because then if you get a bunch of stuff wrong, it's okay because you don't lose as much points. But if you have a test with 5 questions and you get 2 of the 5 questions wrong, you're totally screwed, which is what happened to me last year in intermediate accounting 1, and I got a 70% on a test. Once I watch my Antagony, then I will be done watching. That was funny. What is this question anyways? Oh, I don't want to see the solution. I can't see the solution. Issues bonds at 96%. They are dated. Pay interest semi-annually. Mature in 10 years. Straight line amortization. Did they use straight line? Okay. September 1st. This many bonds were called at this plus accrued interest. Again, apparently you ignore that. So number 7 and 8 are basically the same question, but with different numbers, right? Right? Pretty much. So that's why time to waste time again.
Victor and Moritz is strong. Stronghold of evil. This is where we wrong the rights.
I just need to see something. I just need to see how long my final boss was in this run. Where I'm pretty sure I didn't make a mistake, although I could double check that. I need to double check that I didn't get a bad cycle for the boss on this run. Because that's what happened in my 1151. I got a bad cycle for this section. Oh, I did get a bad cycle, didn't I? But let's see how long the final boss took. I got a bad cycle. What? I got a dead angle in this run too? I didn't even remember that. What? No way! This can't be right. This is insane. I literally got the same exact thing in both runs. The exact same thing. What? Holy crap. No, I didn't. YouTube is being stupid. I can't believe I didn't notice that until just now. Okay, let's check this. First of all, let's see if I got a bad cycle in this section. I don't think I did. Yeah, I got the good cycle, so let's see how much time that saves. I had a 747. I mean, a 147 freaking final boss. That's 3 seconds faster than my 1151 speedrun. Also, how did I get the screen to be wider? Or how did I get the screen to be more skinny here? I don't understand. What's the difference? I know why now. It's because I purposely made black bars on the top and the bottom to make it skinnier. In this run, in fact. Well, not skinnier, but like more space for the timer on the right side. But anyways, so that confirms that I lost at the very most 3 seconds from that slow Nina phase. Okay. So this could have been an 1148 without that mistake. And it wasn't a mistake, it was the controller giving me a dead angle, which cost me the cycle. And that anti-RNG saved the run single-handedly because it wouldn't have been world record without that RNG, probably. Oh, I did beat the record by 3 seconds. But how much time did I save from that anti-RNG? it was a 150 final boss. I need to do number 8 for this. Number 8. So oh my gosh. I made a document called Study Chapter 13. You know what? I'm just going to do it in this document, whatever. Number 14. So, that was funny. It automatically defaults to this one. So, why don't you open it automatically, stupid? Now what? So this is the same type of problem. Except this time they didn't give you that initial information, so it's going to be slightly different actually. So total discount equals so equals 3,000,000 minus 3,000,000 times 0.96. So 120,000 monthly amortization is equal to, now, how many months are there? It's a 10 years, so total months equals 10 times 12. Monthly amortization equals this divided by this. So monthly amortization amortized to September 1st. So that now how many months months to Sep 1? It's going to be, so they're issued on the beginning of 2011. So 2011, 2012, 2013. That's going to be 3 years plus January, February, March, April, May, June, July, August. 8 months. So it's going to be 12 times 3 plus 12 times 3 plus 8. So 44 months of amortization. So it's going to be this times this, and that's the total amortized. Unamortized on Sep 1 equals this minus this. And they called this much of them. Percent of bonds called equals 1/800,000 divided by this. So unamortized on step 1 is going to be equal to this times this. And then so first of all, we want to be, well, it's not like we really need. Okay, so it's weird. It's a discount. So like unamortized discount, do you subtract that from the face value to get the carry amount? Probably, yes. Yes. So carry value SEP 1 equals 3,000. Oh, no. 1. Oh, hold on. No. The carry amount. Yeah, no, you do use the 1/800,000 minus. Oh wait, hold on. You do subtract this. And carry value this, and selling price is going to be equal to 1/800,000 times 1.02, because apparently we ignore accrued interest. So therefore, they have a gain of this minus this. 81. Dude, I think I did it. Holy crap. I did it. I did it correctly. I wonder what he did differently from me. Does it really matter? Not really, because I got the right answer anyways. It's fine. I'm not even going to bother looking at a solution. I got the right answer. Okay, I did set us 8. I did 8 correctly. Now, like 7 could have used the same process as this, couldn't it? I could have done the same exact process as this for 7. And I'd rather not learn 2 different ways of doing the same basic type of problem. So I might just redo 7 again, but with this method. Because like 7, he was using all these fancy things to like save time on the problem, but it wasn't the fact that he gave you the 54,000 that was unamortized on a certain day was completely unnecessary. You could have calculated that yourself. And that's the reason why I was so confused. Well, not really. I don't remember what I messed up on the. Oh, you know what I messed up on the quiz? Because I thought plus accrued interest meant that you had to add accrued interest to the selling price. But apparently you don't. Like, why don't you need to do that? Why? It says you need to add it. What the heck? Man. Like, seriously? Maybe it's just because it's separate? I guess, okay, so maybe, here's the thing. For the journal entry, maybe you do need to add it. But for this calculation, you don't, because it's not relevant to this particular thing or something. That's funny. So if I was to do 7 in exactly the same way, you would think I would get the right answer. I wish I could hide this part here. Discount premium is equal to how did I calculate the discount last time? You know what I could have done? I could have just done 4% of 0.04 times. Wait, no. What? 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 Yeah, I could have just done 0.4%. So that's something that's a little bit less efficient there. The premium equals 0.03 of 200,000, and monthly premium equals months total months equals it's issued on December 31, 2011, and so it's 10 times 12. Monthly premium equals this divide or because it's straight line equals this divide by this. So total months to March 1st. So how many months is it to March 1st? So they're issued there, so that's 12 plus 2 is 14 months. So amortization to March 1st is going to be equals this times this, and then unamortized March 1st is equal to this minus this, and times 0.4. Wait a minute, I didn't do that before. Maybe okay, maybe you don't need to do the 0.4 yet. Carry value March 1st equals 200,000. So unamortized premium, you add the unamortized premium. And times 0.4 equals this times. Okay, so actually, no, wait. So percent all is equal to 800,000 divided by 200,000. So carry value of all equals this times this, and then selling price equals 0.98 times 800. Oh, come on. And then the gain equals this minus this. That was funny. That was funny. That was funny. That was funny. I technically just studied all of those two quizzes. Should I study them again? Oh, that was funny. That was funny. That was. I don't need to study them again. I could study chapter 13. Home problems. I don't know what to study, the homework problems or the class demonstration problems. Maybe I should Sniffy. Study the homework problems. I wish you wouldn't have closed the chapter 14 homework problems. Oh. Actually, I don't know if I want to do homework chapter 13 homework problems because it's Annoying questions. Gosh dang it. After. That was. I'll just redo this whole homework assignment pretty much. It already tells you the answers, dude. It already tells you what the answers are. So it's hard to redo the question. Well, not exactly. What I could do is do this. Oh, come on. Stop showing me the answer. 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 Oh, man, this is so hard. I have to redo this. Stop! Oh my gosh, this is too much information. I can't remember what I did here. Ugh, that's funny. Amount, like this is what I did in equals 480,000 minus amount subject to unemployment tax is 400,000, and then okay, so those are pretty straightforward there. State unemployment tax, and like the first entry is going to be wages and salary. Or what's the two journal entry? Oh. So $480,000 is salaries and wages expense. Is why the heck? That was one P. Salaries is this, and the amount of cash that they paid was simply the amount of cash that they paid to employees. So, and the amount of cash they paid to employees was their salaries and wages minus their taxes. So, and so there's going to be tax liability. There's going to be FICA tax liability. FICA tax payable. Is that what it's called? And how much is that? Well, kill myself. Whoops. The amount. Okay, so now we have to calculate this. FICA tax payable. It's not simply points that percentage. It's FICA tax part 1. Oh my gosh. It's equal to 0.0765 times $370,000. FICA tax part 2 equals 0.0145 times. Well, of course I have to do math. So, never mind. 110,000. So, FICA tax payable equals this plus this. I bet I'm going to get the wrong answer. Wait just a minute. Wait just a minute. I feel like I'm not even getting the same answers as the question. Okay, it's not the same thing. 20 and income tax. How do you say withholdings payable or something, like is 80,000, and union dues is, wait, hold on a second. Like, and salaries and wages payable is going to be equal to, isn't literally just the difference between those? Wait. It's literally just a plug figure because it's this number minus all these three numbers. Oh my gosh, so like there's no way for me to check my work either. Do I also have to calculate the employment tax thing? No, I don't think so. That's for the next part. Because the unemployment tax is the employer paid tax. The employee pays a FICA tax, the employer pays income tax, the employer pays union dues. So you do this equals this, minus this, minus this, minus this. I'm not even going to check my work. That doesn't even look right, but... and so, and then the second thing is FICA taxes, or wait, the second thing is the taxes that are paid by the employer, and the employer will pay FICA tax expense or something like that. Never mind, I'm checking this first one. I forgot cash? Wait. It says they didn't even... Okay, hold on a second. Okay, so... they didn't tell you whether they had already paid it. Man, this is stupid. They didn't tell you whether they had already paid it, but I think I got the right answer because salaries and wages expense, FICA tax payable, FICA taxes payable $29,900, withholdings payable, union dues payable $9,000, and cash, well, that's assuming they paid it already. I just said that they didn't pay it yet. Wait a minute. So second part now. Let's see. And the second part is the fact that the employer needs... Okay, so payroll tax expense, I guess, is what you say here. And we don't know the total yet. So first of all, they have FICA tax payable equals $29,900, and they have unemployment tax. So then we have federal unemployment tax payable. And then we have state unemployment tax payable. And that should be all of them. So that should be it, right? And the amount subject to unemployment tax is $400,000. So wait, hold on a second. No, that's not right. So you can only tax it on the first 7,000, not the 400,000 after that. Wait, I'm confused. $7,000 is the maximum amount that you can have it. You tax 700 or 7,000 is subject to it. 400,000 is not. So state unemployment tax equals 0.035 minus 0.023. So state unemployment tax is equal to this times this. And the federal unemployment tax is equal to wait, what? Wait a minute, wait. What does that mean, after state credit? You've got to be kidding me. After state credit? You don't do 7,000 minus 84 and then tax it, right? Gosh dang it. I'm just going to say it's 0.8% of it's 0.8% of 7,000. Watch it be wrong. 56.84. So shut up. Shut up. You're in my way. What's wrong? I did both of these wrong. Come on. How? How did I do them wrong? I did both of those wrong. Is it actually times 400,000? Wait a minute. I'm going to do... Nope, that's not right. Then what? Then what? What? No. Where's the solution? I can't even see it because it's... The only way to see is to look at this.
Okay, to record payroll, we're actually going to do this in some of these two numbers. They have to match the FICA. So whatever the employee paid, they're going to match FICA, and then they're also, And then we can calculate how do you solve for FUTA. Well, you take the 486,000, which is our total salaries, and we take the amount minus the 414,000, the amount.
I'm dumb, I'm dumb, I'm dumb, I'm dumb, I'm dumb, I'm dumb. Oh, I'm so stupid. I'm so stupid. Oh. This so stupid. Now I have the right numbers. And so I did everything right except for the fact that this was supposed to be that. That's the only thing. 960, 640. Stop. Man, that was so torturous. You've got to be kidding me. Why was that such torture? How on earth does this keep getting moved? Oh, out. That's the problem with this. Oh, isn't that funny? Stop! I hate the new snipping tool. I hate the new snipping tool. Because it doesn't automatically pull up the window when you take a... Stop, 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 stop. Stop, 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 stop. What? 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 Oh. Warranty expense. Warranty expense is stop, stop, stop. That was simple. Warranty liability. Warranty equals what? Well, actually, okay, and the only thing I felt wrong was that one. Why are they so annoying? Why do they have that and not as cash? What the heck? They have you cash, supplies, wages payable. Like, what the heck is that? That's stupid. They didn't even tell you. Dude, he better not have something like that. You better not have something like that in this. It says cash supplies, wages payable. I was completely correct in how I did this whole question, except for that one single part. And this is cash supplies, cash, comma, supplies, comma, wages payable. Oh, fun. Oh, fun. Oh, fun. Oh, fun. Is that the whole question? No. Prepare 2020. What is the difference? There are not very many pieces of this cube that need to be solved. It's just 1, 2, 3, 4, 5, 6, 7. Ooh, 1, 3, 4, 5, 6, 7. Well then. If I put all the pieces here, wait. How? There's got to be a way to like solve these 7 pieces of the cube that are not solved. I can't turn it into a PLL. This part's going. Okay, so I have all of the pieces on the top now. So how on earth do I solve it? And then it gets to an RUR prime. So I have no clue. Like this is basically a ZBLL, and then I do RUR prime. So, but I don't know how to do it, so too bad. %, or 56,000 relates to sales of warranty contracts. Oh man. Oh Do you divide it into 2 separate things? Or do you do cash of 3 million and then instead of sales revenue, you do sales revenue and then warranty liability, or no, warranty revenue. Warranty revenue is there. But wait a minute. Wait just a second. Is it warranty, unearned warranty revenue? So, say 56,000, and this equals this minus this. So, that should be the correct thing there. So, warranty costs incurred in 2020. So for the warranty costs, you do oh my goodness. There's like 3 different things. So they incurred warranty costs. Oh crap. I bet for that one, they're like dumb. I bet for that one, they're like, yeah, cash, supplies, wages payable because of course. 20,000. And then, is it just that you undo? Well, you would have warranty revenue. Okay, and warranty revenue. Wait, do you do all these stuff in the same entry? No. First of all, you do warranty expense here. Would be 20,000, and then this third one is going to be warranty revenue. We have warranty revenue. And how do you calculate it? So, 2-year warranty is going to be 56,000 for 2 years. So, it's going to be 56 divided by 2 because it's for 1 year. And undo the unearned warranty revenue. And that has to be it. So, cash of 3 million, sales revenue and unearned warranty revenue, warranty expense and cash supplies, blah blah blah, and then unearned warranty revenue and warranty revenue, and there, I did the question. Oh my gosh, it's not even charging my phone. You've got to be kidding me. Why? It said it was... do I have any homework at all? Like, oh, I almost forgot. I need to study for my auditing quiz. Other than that, I need to do stuff. That was funny. 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 Funny. That was funny. That was funny. That was funny. It's almost like that clock. What questions? I've only completed 2 of these chapter 13 questions. That was funny. My goodness. My goodness. Ugh. Gosh. I think what I might do is just watch the video for this instead of like trying to figure it out myself again, because like I tried figuring it out myself that one time. Oh wait, never mind. I'll just read it and try to figure it out myself. That was what. During 2022, probable loss or contingent loss, and so the liability, it's a contingent loss and it's probable, and it's between 900,000 and 1.4 million. So I don't even, and they say it's the lower of the two. They say if you have a probable loss, and it's a range, you present the smallest amount that's possible. Oh my gosh. And then probable that they will have a probable loss of this. But they don't even count the insurance policy somehow. Like, I remember this question. They literally just ignored the insurance policy. Why do they ignore it? Like, why? Why do they ignore the insurance policy? I don't understand. So I need to watch the video for these. And this next one is it will be more than the book value, so therefore it's going to be a gain. It will be not reported. Okay, I will watch the video. Four minutes, not too bad.
The key to when looking at contingencies is it going to be a loss or is it going to be a gain? If it's going to be a gain, you're not going to record anything, and you are only going to disclose something. So let's make sure we understand the difference between disclose and record. Record is actually do a journal entry on your financial statements. Disclose is just putting it in the notes. So when you have a gain, you're only going to, you will not record, and you will disclose only when it's highly probable. And this is not recorded until it actually happens. So we're going to look at that. If it's a loss contingency, well, now I'm looking for some specific things. If I'm going to record it, one, it needs to be probable. So I'm looking for that language. And then two, I have to be able to estimate it. And then if that's the case, then I will go ahead and record, and then there will probably be some disclosure as well. So let's go through each of these examples and kind of apply this and see it. So if we look at the first one, we're in the company's involved in a tax dispute with the IRS, and it looks like it's probable they're going to lose this dispute. So this is a loss situation. So the question we're looking for, it looks like it tells us that it is probable, and so I know I've met that criteria, but now I'm looking at, okay, well, what's my estimate? And it appears that my estimate at the time is a range. So I'm given a range of 900,000 and up to 1.4 million. Now, I know the problem tells me that eventually I actually pay 1.2, but when I'm doing my financial statements, this thing hasn't settled yet, so I don't know. So I have to just come up with something. So what FASB has said is if you can, if it's probable, which we've already occurred, now we're looking at the estimate. If it's an estimate and what you have is a range, well, what you'll do is you will accrue or record the low end of the range, actually do a journal entry for it, and then you'll just disclose the high end. So in this problem, we'll go ahead and this question asks what would be reported as a liability. So the answer to this would be 900,000, with the high end being disclosed in the footnotes up to 1.4. Okay, let's move on to the second one. So in the second one, Allen Jackson Chemical was identified as a responsible party for the EPA, and they have concluded, again, we see that language, that it's probable. So it looks like I'm already going to have it, and I'm going to be responsible for the damages, and the amount of the estimate is $5 million. So remember, for the loss, it just has to be probable and have an estimate, and I know it's probable, and they give me the amount. It's not a range, so it's $5 million. And so that's the amount that I'm going to record as a liability. However, you may say, well, what about this? What about this insurance policy that I'm going to collect on this? Well, we're going to consider that a gain contingency. It's a gain contingency, and so we're not going to record it, and nothing will happen with that yet until it actually happens. I can disclose it if it looks like it's highly probable, but nothing's really going to happen there. So we'll just at this point record the loss contingency just because of the different rules associated with this. Finally, the third one, it says Melissa has a manufacturing plant, and it looks like we are going to be compensated. We don't know how much, but it does look like it says we will be compensated more than our book value. So think about that. If you were to sell something for more than your book value, even if it's not fair value, that's a gain to you. And so this is a gain contingency in this scenario, that we're going to get some money because they're going to pay us more than our book value. And so this, again, is considered a gain contingency. And so nothing is going to be reported. So if I were to answer this question, how much would they report? It would be 0 because it's a gain contingency.
Number 4. I wonder if it's a bad idea to be doing these homework problems, and instead I should be doing the class demonstration problems. I feel like my logic was that I want to do the homework problems because the class demonstration problems he talked about in class, which means I have a higher likelihood of remembering how to do it. I don't know. Oh my goodness. That was funny. Right. So, oh, finally, you actually did the thing. Jeez, why did it take you that long to do that? I remember being confused by this because I didn't even know what a depot was. Like, I wasn't sure if it was equipment or land or what. Gosh dang it, I've run into that problem yet again. Man, it's an asset of some type that depreciates. Wait a minute. Wait, hold on. It doesn't say anything about depreciation. Maybe it doesn't matter, but like again, I don't know. I'll just have to look at the book. It doesn't. That's literally just only relevant for the I'm gonna say depot for 600,000. And cash. So that's they bought it. Simple. Then now in 10 years they will need to pay an amount of money to dismantle the depot, and that will be added to depot asset, and it will be a liability. So therefore, the present value of the obligation is 41,879. They already gave you the answer. So all you do is add money to the depot account, and then the assets retirement liability or something. I don't even know the name of the account, so I'm gonna have to just look that up. So I mean that was pretty simple because they already told you the present value. You didn't even need to calculate it. So now I just need to get the proper terminology. So instead of depot, it's plant assets. Plant assets. Plant assets. And then this, obviously this plant assets. And the asset retirement obligation will be called asset retirement obligation. I mean, it could have just went with what they called it. Oh my gosh. And that's it. That's all you need to do. That's so simple. So next part. Copy. Dang, you didn't do it. Journal entries required for the depot and the asset retirement obligation at the end of the first year. So first of all, the depot will depreciate and the asset retirement obligation thing will depreciate. So first of all, depreciation expense and accumulated depreciation, is it like assets? And then secondly, depreciation expense, accumulated depreciation. I'm not sure, but what it's called exactly. I'll just have to fix it afterwards. And so first of all, stop. It's 600,000 divided by 10. 60,000. And then this. Okay, never mind. You don't. Wait. Yeah, but you do depreciate this thing, don't you? Don't you depreciate this? You need to depreciate this and you need to increase this. So there's literally two different entries here. Man. Well, that means you do this divided by 10 for this one. 4187. 4188. And then you have asset. This number needs to go up. And if you increase this, you go this. Asset, retirement, obligation, and then interest expense. So now how do you get that number up? You take equals this number plus, equals 1.06 times this, right? That should be it. Come on. Nope. No. Equals 0.06 times this. 2513. Okay, so let's see. Is there a C? Yes. So first, depreciation expense 60,000, accumulated depreciation plant assets, and I was right for both of those. Asset, retirement obligation. I was right for all of them. All of these were right in terms of the account names. And the numbers are correct as well. So all of this is correct. I did it correctly on part B. And then part C. And then we can stop. That was funny. Part C is, that's not even necessary. Now what? Pays a demolition firm. So gosh dang it, everything. Gosh dang everything. Is it just one journal entry? Oh my god. Like, you have to record all the depreciation and all the other stuff from before as well? I just need to quickly glance at it to see if it can. Nope, it's just one journal entry. So they lost cash. 80. Asset, retirement, obligation. Well, at this point, the asset retirement obligation will end up at $75,000. So you need to cancel the asset retirement obligation of 75,000, and then what's the difference? What's the difference? Is it some kind of loss? Loss on disposal? Or loss. I'm just going to say loss. So, and then see what their number is. Or what their name is. Well, that was easy. Cash. Loss on asset retirement obligation settlement. Okay, so we did that question. Why didn't you need to? Did they? I wish they would have said you already did all the depreciation entries. This is. Did I finish 3 of 6? Oh, I actually finished 4 out of 6. Thank goodness. That was funny. we'll do the rest of it at from 2 o'clock to like 4:45, pretty much. So oh man. I wonder how badly I'm gonna get on that one test. That was funny.